where are we with the markets? Well, we had US inflation coming down. You can see loads of dollar pairs are ramping up and up. A lot of my Academy members have asked me specifically, what shall I do about that and how does it all work? So I'm going to go over that as well. If you're someone who wants to take trading seriously, remember, if you click the link under here, you'll get my free training. Okay, and after you've got the free training, you've got the decision to do whatever. But if you do get on board, lots of my Academy members are benefiting. People are learning a ton. I've been trading for 10 years. I'm only 24, but I started when I was 14. And my strategy works really well because it covers all angles of what you need to know. And of course, as someone's correctly said, I have a really high hit rate on TradingView. Simply go to my profile, watch all my posts and videos, and you'll see that I've called it 90% of the time. So, nat gas. Okay, what does nat gas look like? Well, nat gas is a highly sentiment-driven asset. So you can see once you peak up here after that extreme rally, you've gone from July/August 2020, you go for 2 years to 2022, and you come way, way, way up. All right, so 2.2 all the way nearer to 10. Okay, so then you get absolutely roasted. Now, the data for this on TradingView via Pepperstone goes back to 2015. It might be that I can get something further. If you've got the ticker for that, Robbie, let me know. Hey, Stromica, great to see you. I think if I type natural gas, maybe we'll get further. Not sure. Anyhow, the price is as low as it was after it had been thumped before. And that happened in 2020. All right. So going forward, you have to decide, well, if I know this is a heavily sentiment-driven asset, if there's no sentiment for people to be buying natural gas, then it's going to look like this for a long time. All right. Now, it is more than possible that you'll get lower, and I don't think you're really going to get higher, particularly, until you get something that causes that to happen. Now, you had from 2020, COVID time, more or less, all the way up to 2022, when the global economy starts to fail, of up move. Okay, that was because there was demand for natural gas. Demand for gas then eases off, the price comes down, and where you are now is at a point where people don't really care. Okay, so you can see how long this went on, right? If you took this trade over there, let's say, for whatever reason, if you didn't exit it there, you'd still be in it all the way along here. And as I said, it's heavily sentiment driven. So for any large prolific move, you would need a significant amount of market sentiment to drill it to the upside. You don't have that at this point. That's why it's dawdling along. That's why it's weak. So then comes the decision. Should I trade it or should I trade something else? Well, if you're willing to wait, okay, and take this long, I should think at some point you'll be able to take gains on it. Now, it's going sideways for a long time. It's done this since February last year. And all it's doing now is resting upon some fairly early support. But again, it's all minor. It's very minor price action levels all the way across. You can see that there, minor PA, minor PA. So in the near term, I wouldn't be surprised you get a bounce. But I have to say it, Robbie, I would far more rather the trade practically everything on here, even crypto. Okay, it's just boring at the moment. Perhaps my natural bias might be long for a time when people resume their demand for natural gas, but at this point, that's not the case. Okay, so that is my overall opinion. Has anyone got any questions about? I'm just going to load Discord up again. Has anyone got any questions about anything else? Just pop them in for now. Otherwise, I'm just going to move on, and I'm going to go for the yens. Okay. Sorry, not the yens yet. I'm going to go for the dollar pairs because the dollar pairs are what people are focusing on a lot. I've noticed that. As I said, my Academy members asked me about US stock markets, futures markets, US pairs, things like that. So we'll start off with the pound. I did analyses on this. I did one lately. There it is. 606 people have seen it. I did this yesterday, and I'll go over what I meant because I obviously drew that one. It wasn't a video. So if I go to your monthly, all right, and I zoom out, what can you see? What can you see here? Okay, even better or even more so, I'll take you to the 12 monthly or your yearly. Now, from 1971, okay, sorry, you've come all the way down for 52 years. You've been in downtrend. So for 52 years, if you were trading this to the short side, okay, and you had a large amount of capital, even these swings wouldn't have punished you and you'd be out for gains. Okay, so your overall bias long term is a shrinking value of the pound against the US dollar. That's a non-negotiable fact. That has gone on since 1971. It's now 2023. So you already know that your pound dollar is a short as a long-term bias. Okay, it's fact. So your job then is to pick where would you want to short. Now, where you want to short is never after a fall. Okay, it's never after a fall because you naturally will be selling when the smarter money in the market is getting long. This occurs on that basis for every single time frame. Doesn't matter which one it is, yearly, monthly, weekly, daily, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. It all operates the same. Okay? Markets trend because people pull their money out when assets go up and they put their money in when they go down, if they're on the right side of the market. Now, that's why I DCA. That's why I DCA all the time, because I'm fully aware I'm not going to take a trade and be 100% right and get it extremely correct every single time because of the following. Okay? Now, let's hypothetically say you never closed this trade out, right? Let's say you shorted there on this green candle. The candle comes up, you're halfway through the year, 1987, and you say, okay, well, I'm going to get short on the pound against the US dollar. Now, at some point, years later, you would be right. But before that, you would be temporarily wrong. This is the case for practically anything you can trade. You will never, ever be right 100% of the time. That is why I don't use stop losses, because you can still be right even if you're wrong temporarily. I am temporarily wrong now, right now, on various assets, but they are not going to end my account because I have hedging methods so that on these rallies, I can space my positions out enough. I can put the correct size in the market with my full risk plans, and I can hedge if things start to get hairy, if they get worrying. Okay, if I think, oh crap, my drawdown is escalating too quickly, my equity isn't sufficient for that drawdown, and thus I'm going to get in trouble. People don't do that. They don't think about that ultimatum, and they think that's impossible. And lo and behold, as it probably has been for many of you, that occurs eventually. All right? Now, it does that because if you're not preparing for the ultimate reality that your equity will suffer, eventually the market will swing against you and it will go so far that you can't handle it. You can't stay solvent with your business. The sign has to go outside saying, I'm not trading anymore. I panic. I quit. You might get to that point. Okay. That is because you've got no risk plans. You don't need to shut the business. You need to handle the business carefully. Okay. If you're just coming in and you want to learn how to do that for free, I'm showing you the link now. It's under the video. Okay. I'll pop it in the chat box. Hey, Philip. Philip's an Academy member. I'm sure he's doing well. He's given me a review. Thanks for that, Philip. As always, if you have any questions, DM me, let me know. Okay. I want to hear how you're getting on. DAX, dollar yen, pound yen, absolutely. Okay, so that link there is for anyone who wants my free training and is interested in learning to trade. Before I do those pairs suggested by FDA official and swing down 30, I've seen swing down 30 a few times. I'm just going to finish what I was saying. So your long-term bias on the pound dollar is short. Okay, then you flicked your monthly. The price is coming up. Okay, now remember what I said. I said at some point you'll be temporarily wrong. Now, the reason for that is because the price could easily keep rallying all the way to this area of yearly resistance. All right. You've then got a really thin gap, really thin margin to the second level of resistance. All right. Because you've come under this previous price point where the price bounced and you've got that. So if I'm willing to short, at 132.0 or 13188, okay, I'm okay with that, even knowing that it's likely at some point I'll go even higher because I'll be out before that happens. And if I'm not out, I'll add, okay, and I'll add in sizes that are appropriate for my capital size, okay. So at this current point, my short bias remains slightly higher. There's your key 100 MA, which you're coming to. So you know you've got a high price. And like I said, the smart money are rubbing their hands now, going, oh, I can't wait till the people who are losing money slam in long. They jump in, they buy, they buy, they buy, they buy, they buy. And what happens? I think we all know. Someone could probably answer that for me. The market comes down and it's all over. Don't be one of those guys, okay? So I'm looking short. I can see I've gone up for 10 months. That's long enough for me. I'm short now. I'm willing to add as we go higher. I'm controlling my equity at all times. So I'm going to go for the DAX. Hey, the DAX, good shout. Thanks for Swing Dow. Maybe you should be Swing DAX, perhaps. I'm short. I like it short. I've got the same thing on the FTSE. You're getting a rally at the moment. Doesn't look incredibly convincing like it would fall tomorrow, but technically that's a good short. You're coming up to those previous highs. That's where people are going to liquidate longs, flip to the short side of the market, and go ahead and get short. So the DAX, that's summarized there. Dollar, yen, I've done the pound dollar. FTA official wants to learn about the stock oscillator. I would, but that is in my academy for people who pay, unfortunately. I generally use it as a judgment for the validity of price across various time frames all in one. Your dollar yen, it looks weak. I think you're falling. You'll know if you follow me. I said to short it. I called it really well because you can go back on my profile and have a look. I said that is going to be your short zone, and boom, you've come right down. I said this would be long. I called it. That was called. Hopefully you took profits. Am I incredibly confident about relonging it now? Given its early price action, no. You're having early rejection. I would hold off, let the dollar yen drop if it does. If it doesn't, I would only look short far higher up because you've had a significant fall, various daily red candles. I think it might struggle to get there, but I would spread your shorts higher up, okay? 1415, 1435, areas like that. Euro dollar, I've just done the dollar yen. Euro dollar. Oh, and gold. Don't forget gold. Right, so I'll do the euro dollar. Okay. Euro dollar, same bias as the pound. I did a video on this. Okay. Again, like I said, I called it short once, and now I'm shorting again. I like it short here. You'll slap bang into those MAs. Zoom out again, and you can see at least since the financial crisis, you've been in downtrend. So I'm looking for that bias to remain. You can see you're flatlining in overbought territory for your stock oscillator. Okay, you can see that. So that is my short zone. I'd scale in short in the market. Okay, and that's where I like it short. If you're going to add, if we get through this level, I would hold off till your 116. That would be ideal at that point, just to get short. Okay, so you're still far off your 200 MA, but you're retracing from this enormous fall. Normally, as you get higher, your odds of having a significant fall increase. Okay, so you're a little bit like the pound. You haven't gone up so much in one line, but you are a little bit like the pound in regards to where you want to look short. So you could semi-light short this. Further entries, I'm willing to hold off until 116. Just a reminder as well, if you're in Be Profitable Academy, you're a paid member, okay? I'm going to post an analysis Monday morning for the whole week. If you want to be on board to get that, you will have to join the academy. Go to this link, get the free training, and then there's a link under my webinar where you can join. Also, if you're not in the Discord, jump in, come and have a chat. You know, ask me whatever you want. So pound dollar, euro dollar, done. Pound New Zealand. Philip, my academy member in here, is asking for. Pound New Zealand's great. I'm sure you hedge longed it if you're in my academy. I would still be hedge longing. I think you're going to get higher with this. I think you'll get back up here. So that is your hedge long zone. I don't know what I just did there. Oh, there we go. You learn something new on here every day, I think. Yeah, I called it short. Again, go check my profile. I called it short various times. You should be out for gains. It's now a long to the upside. So if you've taken it and you're hedging, that's great. Well done. I think you'll beat around the bush for a while. I don't think particularly you'll blow through here. I should think you'll get sustainable hedge gains at this current point inside that sideways natural market movement. Okay, because look, up, down, up, down, up, down. It happens. Okay, boom. What does that do? Oh yeah, and again there, and maybe here, and there. How many times do you need it to happen for you to get sufficient hedge gains? DAX, I did. Gold, I will say now. Okay, so let's go for it. Okay, so gold. Again, you can watch back where I said I'd short here. You took minor gains. We've reshorted lightly. We're now higher. I think this will not last. I think you're going to get up again because the level you hit before, 5.3, wasn't significant enough for me. I said you could lightly short. If you did take it short, I would exit that now. I think you're going to come up to this level of resistance higher. It's far more feasible for shorts here. All right, 1970 to 1972 is ideal for me for shorts. All right, so that is where I would look to short. I think you are going to get higher. Reason being, if you drop your time frames, you've got early price rejection, and you've got a bit of short level higher up anyway. Okay, so your short zone 1972 to 1970 area. That is my bias on gold. Euro New Zealand showing weakness. What do I think? Well, I just did pound New Zealand, so my bias probably at this point. Well, obviously it looks a little bit different, but they're both sideways. I'm surprised a little bit that you said it shows weakness because it's not showing weakness. It's showing strength. If you just look at the candle, this one, it's massive. You will need plans if you thought that was the case, I would say. So be very careful. Anyhow, short, ideally 1765. Further short, higher up, probably about 1785. All right. So if you were going to short this impulse candle, you've got to do it very lightly because you're still not very high up. Okay, you've only just come up from here. You're banging into resistance. You're only halfway through the previous move. You're coming up to key MAs. That is not a massive short zone. You could even just say, all right, I'm not even going to short it at all. Okay. You could hold off perhaps until here, but probably I'll reassert my bias. I think that is ideal if you get up there. It's just a little bit too early for me before then. All right. So, yeah, I mean, I would look short 178 area. Okay. That is my ideal short zone. But good question. It's definitely not showing weakness, at least not on the near term. Even if you went to the weekly, it's not really weak either. I mean, look at the rejection. Look at all this price rejection. Look how far you've come up for weeks. Okay, just be very careful with that factor. So if you could smash the like, guys, as well. I don't know if I mentioned that. It would really help me come up in the ranks. If this is helping you, let me know. Has anyone got any further questions? I'm going to look at the yens in a sec and go over those. We've got CAD yen, AUD yen. AUD yen I spoke about being long. You've got rejection, so exit for gains if you took it. If I just check over your dollar yen, you're seeing rejection again. Am I totally convinced it will come up entirely today? Probably not. You're coming to early resistance. Be careful if you're going to get long. Where's my Swiss yen? For some reason, I've got it at the bottom. So Swiss yen is one for many people. If you followed me, you'll notice we got it right about 8 times on this move. Okay. Now remember, I said you won't be right every time, but we banked eight different trades for profit. Now we're coming up again. My short bias remains. Okay, we were short early, yes, and you could have exited on that dip. All right. If you didn't, you've still got 8 times gains in the bank, and the market eventually will come back under and clear out that for you. So just remember, if the market is rallying away, that's fine, but you're taking gains with it. So you're not actually that much in danger. You have to determine really what a true drawdown is. Okay, you've got drawdown that you can look at and say, well, today I lost this much or I'm down this much. But if you think about the true drawdown, you would factor in what you made the day before, what you made the day before that, and everything like that, because that's the only way you can actually get a long-term scope of your P&L over time. Okay, your P&L over time is not going to be accurate if you don't include everything you've made already and you just focus on what's happened today. Okay, so make sure you do that. It's really important. So, I know if the market rallies across various pairs that I'm trading, my drawdown gets significantly higher. The gains I've taken before are going to sustain that rise in drawdown. Okay, so that is the crux of what I do and how it works. At all times, I manage my drawdown per asset, max size per asset, everything per asset, and per portfolio as one as well. So 25 minutes we've been on. We've had some fantastic questions so far. Thanks for your comment again. I'm glad it's helping. If you can indeed press the boost, guys. 5 people have done it. If you can press the boost now, that'd be fantastic. I like being up the ranks. It helps me. So we've done various markets. I will just talk about the dollar CAD. So your dollar CAD's a good one to go over actually, because you had your bounce off here. Now you can see and you can judge early that this is slightly weak. Okay, so I wouldn't be surprised if you get lower therefore. And again, I'm using that early inference. Every time I'm using that early inference about what's gone on. Now I wouldn't be surprised if you get a similar, but obviously on a smaller basis, reflection in the market like this. So it's stumbling down, okay, and you've got the same thing now. If you swap to your 4 hour, okay, the market's falling, but those support levels which I labelled are not significant enough for it to push up. Hence, there's no buyers there, or there's not a lot of buying power. So I would just hold off, and I'm doing this myself. I'm DCAing in. I had it long before, lightly. I've taken gains on the dollar CAD as well, so I've banked those. My drawdown, my true drawdown is reflective of the profits I've taken already. I'm willing to wait. I'm willing to wait for the price to drop near a 1297. Okay, 1297 plus. I'm totally okay with that. If it has to get there, then it has to get there. All right. So, yeah, my bias on the dollar CAD is there, and like I said, I'm reflecting off that early PA. That has clearly caused problems for the first push. Therefore, there's not enough buying power on that dollar CAD. I get asked this question all the time. All the time, people ask me, will this news event do this, that, the other? Just remember, it may not. It's not your job to be an economist and determine what the news is going to do to the markets today. You need to be smarter. You don't need to be an economist, believe it or not. Let the news come out, let it affect markets, and then make your judgment after that. Okay? Make your judgment so that you can more or less say, all right, well, I've noticed the dollar has done this, the Dixie's moved to that, and I can go ahead and benefit from that reaction. I can make an educated decision based on what I've already seen happen. Okay? Because at the end of the day, that's all you can do. Unless you want to study an economics degree and go right into a hedge fund and be an analyst, you don't need to do it. Let them do that. Let them analyze the market. Let them do their economics. Let them put the result out and let the market just show you what happens. That's all you need to do. So I hope it affects the dollar, because that means I'll get volatility, which means I can make more money. Okay? So if it does, it does. If it doesn't, it doesn't. But definitely don't guess. Second you guess, you'll get pretty much cleared out, because you don't specifically know what is going to happen at any time. So yeah, you going on from that, I think I've covered most assets. Pound Ord, a little bit similar to the pound New Zealand I would look to hedge. My drawdown has grown, but I'm managing it well. And remember, as I always say, look, if you don't know how to manage your drawdown, you have no risk plans, you're not in the Be Profitable Academy, then you will find that trading gets hard. If you want to do that, go to https://www.beprofitable.io. Okay, that's my web link. If you're wondering, if you want to get things right, I'm going to post a pre-market analysis for the London session and the rest of the week on Monday. That is now an exclusive bonus Academy members get. I do that so everyone is on the same page with how I am trading. If you watch these streams, they'll help. Yeah, they'll help you learn the basics of how I do things, but you won't get exactly what I'm doing in and out of the market with the right risk sizes. Okay, so when the market swings into your stop loss, you'll be out and I will still be in the trade and I'll be accumulating gains via DCA hedging, etc. CAD from Lalan, sure, I can do that. So CAD is an ugly asset, really. I mean, it's not my favorite thing I could trade. Again, look at that, really weak drop. You've still got a high stochastic. I'd put your timeframes up and perhaps consider shorting slightly higher. I think you may get slightly higher. I don't think this looks good enough for me. All right, so higher up, 908. All right, 908 is your short zone. So you've come up to your MAs, you can see the drop visibly is not strong enough. You react to the price action early and you reposition yourself 90800. Okay, and you reflect on your stock oscillator, clearly, which is overbought. That's my CAD bias. I would perhaps say there's various other things you can trade also. So yeah, that is your CAD. I think that probably helps a lot of people, particularly. I am updating my ideas. I do post a lot of ideas for people who are following me. I can't see any questions at the moment. If you do have them in the Discord, I will give you a sec to type them in. Otherwise, let me know if you have any there. Generally, I would say the markets are, every now and then, the markets start to push in a certain way. And you can see the arrangement forming quite well. And you've got that as the case on various different things. You've got those yens pulling back, some of them re-rising now. Okay, AUD yen, Swiss yen. And I'll just go on my S&P mini futures because I did an analysis on this yesterday. I said, and I can show you as well, two things. Okay, I said yesterday, let's go to yesterday, shall we? 4 hour. I said yesterday, where are we? I'll probably have to go lower than that because you've hardly had any price movement. I said yesterday to take it short. Okay, you could have exited for early gains. Now what you're seeing is the second part of that, where I mentioned you'll get to 4570. It's very likely. So hopefully you exited those shorts, and now you're well on your way to that price target. Okay, so that is going to be where you would look short. 4570 is ideal. Okay, or 4572, something like that. So reflect on your overbought stochastic. Reflect on the fact that you've come up from October 2022 to July 23, 9 months. A significant move to the upside. If you view it on your monthly, even better. Okay, so I expect price rejection there, and nonetheless, it's a good place to DCA because if you're going even higher, you'll beat previous highs, which of course are, clearly, if you go above that, you've got an extreme high. So you should be short anyway. So from a technical perspective, the S&P is definitely a short. And remember, as I always say, you can't have sentiment going on forever where the S&P is rising and rising and rising. You should have learned that from what happened last time. And getting short near it again, is wise, because what you're doing is you're shorting near where the market has previously rallied. Previously fallen away. So you look at that high and you think, okay, well, what happened before? All right, what happened before? My stochastic peaked and it starts to come down slowly, and then it bottoms, and then it comes up. What would you be doing again? So you've seen it fall here, you're back there. Would you rather be long or short? Given that you can see people sold before, and that's the only evidence you can actually go off, what you can actually see, and what we can agree on, because we can both see it, we both got eyes, or are you going to make up a reason as to how you would do it? It's up to you. But I would far rather short, okay? Put it that way. I'd far rather short. So, yeah, S&P 4570 is ideal, okay? Crypto, for anyone who cares, I guess. That fall you've just seen isn't significant. I think you'll probably get perhaps here, maybe there, eventually. Doesn't look particularly appetizing. I mean, if it rocketed up and you had massive market sentiment, that would be cool. But whether that will happen or not is a guess. So I'm not trading crypto, and I don't really. I mean, my strategy works across all assets, but some need to be treated differently for different reasons because they're naturally HVAs, for example. So oil. God, I'm getting mixed up. It's been a long day. I didn't have too much sleep last night. But oil, I like it short, slightly higher. Let's go for 78. Okay. In line with where you've previously fell, I'm fully aware that I could indeed rally significantly higher. 86, 93.5, places like that. All right. I could rally and I could get there. So I'll DCA in. If I get uncomfortable, I'll stop adding. All right. So I've been lightly short already. I'm going to re-add if we get there. And any further moves than that, like I said, I can DCA in over time. So I'm fully in control of my equity, and I know what my drawdown is going to look like. I know what my true drawdown is going to look like if I get to $90. And remember, $90 is more than within the question. All right? If you pull out your fib, $90 isn't even halfway of the previous move. So you can't pretend you're not going to get there eventually. But I have banked various gains on oil already. I'm already in gains on oil. So if I keep DCAing, I'm just going to make more money. And if the price keeps rising, I'll keep accumulating profit as long as I'm hedging correctly. So some guys, they don't do that. They'll just keep shorting. They won't hedge. They keep getting in short. The market goes up, but up, but up, but up. They don't hedge in between. The risk gets significant and they close out. I had a guy, it's happened so many times, I can't tell you. Lots of people say to me, Will, I don't want to pay to get on board because I'm trading and I'm trying to make the money trading and then get your materials. And then they message me 3 months later saying, Will, I've lost all my broker money. I don't have any money and I still can't buy the course. Right? So don't be one of those guys. If you don't have the risk plans and material, you are blind and you are guessing. You will not get it right. I can tell you, you will not get it right. Okay? You cannot guess your way through trading. You'll lose everything. Just don't do it. That's a slightly negative note, I know, but I'm just trying to get you to understand the reality and what can occur. So don't be one of those guys. Or dollar looks fairly similar to all CAD. Okay, you peaked up. This one I prefer short. Not yet, because you've got poor early PA. I would reflect on your daily chart for this. And again, much like your all CAD, I think perhaps you may find you get slightly higher before you get any significant resistance. Okay, that takes you to 6942. Again, look at that stock oscillator. Does that say do you buy or sell? Should you sell your house and completely get short? No, you just shouldn't buy. All right, because you're naturally avoiding reality. You're avoiding the reality of the markets, which is when prices get high, you should not be long. You should be getting short. Okay. Someone asked me where I would hedge on this via my methods. You could lightly hedge now, extremely small. Otherwise, let it drop and you can lightly hedge here. Someone actually told me this. You know what? This is a really good example. Someone said to me when this occurred, okay, that was the end of June, Will, do you think that this asset is going to come back up to, and I remember it specifically, this point? Do you think you're going to get back up to 0.674? And I said to him, it looks weak and I don't think so. And then it fell under. And I said before that, there's a good chance you'll come up even higher eventually, but you have to let things roll. Okay, it's just an alarm. But he would have been out down here, or at least close some of it, and then the market rebounds. Okay, so just remember, if you're trying to guess, you will be right eventually, but you won't be able to maintain the risk of that trade. Again, I don't do risk to reward ratios. I believe it's a myth. You know, I think it's made up. It's decided by you, what you want as a risk to reward ratio. It's not decided by the market. Okay, the market dictates where people are going to get on the flip side of your trade. It's not up to you. So you can put your risk to reward wherever you want. You could say, "Oh, I want 100 to 1." It doesn't mean it's going to happen. So I don't do risk to reward at all. I just don't. Nothing in my academy says you need to do a risk to reward. You don't risk a certain percent on every trade. I think it's all mythical. Okay. So there you have it. That is my opinion. You know, some people will say that's not right. Some people say it's right. It works for me. So that's it. But I mean, a daily trader as well. What's a daily trader? Do you mean a scalper? Do you mean intraday? I mean, which? That would completely skew your risk to reward. It would skew your size. This is entirely based on your capital. Again, it's all in my course. Unless you have that, you won't know what's going on. I can promise you. And I say it so many times, you'll lose all of your money in your trading account. I'm telling you, it will happen. Just don't gamble. There's no point in gambling. Just get what works. As a finishing note, almost, ord on the weekly, ord yen, you come straight back up. If I swap to the daily, I think perhaps you could have an ideal short zone slightly higher up. I would only take it light, and the reason why I take it light is because you're not far off your PA level to the downside, i.e. where people are getting long. So, of course, if you short, you don't have far to go until your target. So you'd have to be really careful shorting it because you've got a diminished profit margin, hence a higher risk on that trade. Okay. The distance between getting short and long, you know, you need to be careful on it, basically. FTSE, if anyone's interested, I'm still short. I'm short now. I think you'll fall. And I think you'll get a larger fall in line with this. If you don't, I'm scaling in further. I like it short even more higher up. The UK economy is absolutely ruined at the moment. So I don't hold that much confidence in stocks anyway. I've got various stock holdings on the London Stock Exchange. I trade various stocks on there, mainly for dividends, income, and gains, just like I would in my broker. But there are periods like now where you get a seriously bad economy. You know, inflation's still not really dropping a lot here. You know, prices are still going up. You pay ridiculous amounts when you go in the shops. Okay, so, you know, do I think stocks really are feeling confident? No. Hence my short bias. Okay, I've looked at the market sentiment. I've reflected on what's going on overall, and therefore I'm short. You'll notice that the near-term sentiment has pushed the market up because, you know, a lot of the media and the central banks are trying to give confidence. But you'll notice what happened here. Every time you just dip within your 20 and your 40 MA, and then you get wasted again. This time it's slightly different because the candle you had pulling you out was like this. So clearly there's force there. Am I completely convinced it will last? No. Do I think today you'll get a fall? Well, it depends on news. Over the weekend, you might see something change in the UK economy. My bias remains short, okay? And I'm lightly short. I'm not extremely heavy short because, of course, you've hardly come anywhere. You've come up from 7230 to 746. It's not a long way. I hope I will become a millionaire. Well, if you're guessing, you won't be able to do that. You'll get you won't make money trading. If your goal is to become a millionaire trading before you've learned to trade, you're doing the wrong thing. Forget about the money, okay? Just forget about the money. It's not about the money. It's about the skill. The money is something you'll make later. You have to get the skill first, all right? So forget the money. Don't worry about that. Maybe for some people that sounds wrong, but I'm not going to sit here and say, look, you'll be a millionaire tomorrow, just copy what I'm doing, because you have to be someone who's willing to say, all right, you know what? I'm going to put the work in and I'm going to try. And I'm not obsessed with money, okay? There's more important things than money. I mean, we're all here to make money, of course, and that is the goal. Money's great. It helps a lot. But what is the point in hoping that it's going to go right without actually doing anything about it? Okay, that's my point. So you have to do that first if you want things to go better. All right, and I'll leave you on that note. If anyone wants to press the boost, that'd be fantastic. I hope what I said today really helps. If you're new and you still are not viewing my free training, you get a couple of hours of it. It will change your trading. It's great stuff. You can get it on the link below. If you want to join the Discord, please do come in. If anyone messages you for money, it's not me. You can send me an email. You can go to my website, which is within the Discord over here. Oh, sorry, no, that's a free training. But you can click that link and come in. Go to Be Profitable here. You can click this one and it will take you straight to my webinar. Okay, you can view that for free. And then if you want to get on board while spaces last before the price goes up and with all these bonuses, okay, it's just beprofitable.io/checkout. Okay, that's how you get on board. I hope everything helps. Remember, if you want to get next week right, you don't want to go over the weekend and just jump in next week and just get things wrong. Don't be that person. Come on board, learn what actually works. View my private Academy members analysis on Monday, where I roll through the whole markets in depth with all my risk plans. I can help you with your risk plans. Just tell me what you need and I can do it. So thanks for watching. Grab the free training underneath. It's been great. I'll see you next week.